on Talking Lifestyle, Property Fast Track with Charles Tarbey. Thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
Nick Bennett's my name, and welcome to Chairman and Owner of Century 21 Australasia, Charles Tarbey.
Thank you very much, Nick.
How you doing?
Yeah, great. Thanks.
Now, you've been around this game a long time.
Yeah, so I was hoping you wouldn't ask me that.
Look, we've got to start with the hard questions. You've done lots of media, and you still do so. We can see you on Sky at the moment.
Yeah, that's a show we've been doing about 4 years now, every Monday night. We just get through a number of stats that go on, and I sort of want to go through those as well here. And we also talk about interesting properties and situations in any terms of purchasing, selling, property. That's just really what it's all about.
And taking your calls tonight on 13 12 83. So if you've got any questions in relation to property, Charles is here to help you, and he has loads of wisdom he's picked up along the way in a very long career, which now we'll go right back to the beginning. Okay. From what I understand, it was a humble little one-off property outlet in Penrith, New South Wales.
Yeah, interesting place to start.
Tell me about that time and what's happened since.
Interesting place to start. I grew up in a small country town called Crookwell, so I'm a country boy.
Yeah.
Came down to Sydney and got a job cleaning flats, hoping to go to university, but I ended up staying in real estate. But just a few short years later, I had the chance to open a real estate office, and it was based on the fact that I'd purchased a property, Nick, at the age of 18. So a couple of years later, the market had changed, gave me the equity to do what I wanted to do. So I opened my first real estate office, lived by the philosophy that anything is possible when you don't know what you're doing, because if I knew what I was doing, I would have took myself out of it. But it went from there to a second, third, fourth, fifth office in my mid-20s. And then I started a franchise called Combined Real Estate, which grew to 50-plus offices out Sydney, Sydney West. And the opportunity came to buy Century 21 Australasia off the US parent because they wanted to come into Australia and expand it. Yeah. And so I purchased it, made it 100% Australian-owned company. But it has a fantastic global connection to over 7,000 offices around the world. And that was one of the main reasons that interested me. My daughter convinced me at the ripe old age of 11 that...
Really?
Yes, she gave me such a fantastic line that I said to her, why should I do it? She said, well, Combined Real Estate's like Australia Wonderland, a theme park west of Sydney. She said, lots of people know it, but to her, Century 21 was like Disneyland. Everybody knew it. And it really blew me away when she said that.
Out of the mouths of babes.
Absolutely.
Has she still got an interest in real estate now?
No. She's smart enough to become a naturopath and a nutritionist and do something completely different to what I do.
Keeps you healthy.
Yeah, sure does.
A great journey. So what have you learnt when it comes to the power of being a part of a group or a franchise, if you like?
Well, look, firstly, really owning real estate is just a wonderful thing, but selling real estate is even more impressive. We never really have had a great rap as an industry over the years. And
why is that, do you think?
I think it's because you're dealing with so many mixed emotions, and it's very hard when you're acting on behalf of a seller to act on behalf of a buyer at the same time. It's just, firstly, it's not legal in the true sense.
Sure.
So it becomes very difficult trying to balance the relationships. But being part of an organisation really changed it for me, because as an individual office sitting in High Street in Penrith, it became difficult because I was competing against already established real estate chains. My competitors, who are my friends, whether it's Raylene Horn or Hooker or Ray, they're all they're great guys, great businesses, and they were around already, well established. Some of them going back to 1883, I think. Raylene Horn,
is that right?
Yeah, and so they've been around a long time.
Yeah.
So it was a bit difficult, but as I started to grow the business and started to put groups of people together, it became evident that as a team, obviously, you could do so much more. And as the business expanded, we started leaning off each other's experiences, learning more and growing. And I'm proud to say that the industry has changed significantly this year since I started in 72, being my 45th year, I guess, this year in real estate.
Congratulations.
You keep the age thing down. You have to make any comments about how I look either, so radio helps me there.
No, I'll stay right away from those, mate. Yeah.
Thank you.
So a lot to talk about tonight, and thank you for giving us some background. I wanted to get that up front because that's going to give people some confidence to get some guidance from you. You've been at it a long time, since 1972, 13 12 83. Charles Tarbey's here, Property Fast Track, taking your calls, anything to do with property. Could be commercial, could be residential, could be investment, could be a piece of land. 13 12 83, or you can click on feedback at talkinglifestyle.com.au. We'll take your calls. A few lines are free, 13 12 83. As we get closer towards the next hour, we'll also talk about some of the auctions that have been going around the last few days. Tom Panos knows his stuff.
He does. Tom's a brilliant real estate practitioner, a brilliant auctioneer, long history in real estate, although a lot of people don't think he's had real estate background because he's with News Limited, but he did start in real estate. In fact, I met him in his 20s going back, and he looked at joining my organisation at the time. So we've had a very, very long working relationship, but he gets a chance to look at the broader aspect of real estate, travelling around the country as well, as I get the chance to do in my company. And he's got the stories, and he interviews a lot of agents. So I don't want to talk to him just about auctions. I want him to tell us some real stories about some of the things that have happened to him over a period of time. Nick, the other thing is that my business operates in real time. So at any point in time, I can see what's happening right across Australasia just by going onto our platform. And you can isolate suburbs, you can look at the listing numbers, you can look at the conversion ratios and so on, all in real time. So from an organisational point of view, we get a really good overview about what's going on in the marketplace.
Fantastic. We'll get to a market wrap in just a moment, but finally, as we look ahead, tonight we'll talk to Stuart Waugh, who is an executive director with Bell Partners. Now, there is a plan to allow first home buyers to raid their super in order to fund their property. It's just a plan. I see that former Prime Minister Paul Keating, who is a big part of the whole idea behind having super in this country, is completely hosed down and panned it.
Right.
So we'll talk about that.
That's good, yep.
Let's go to Kapla. He's in Parramatta. G'day, Kapla. You got a question tonight for Charles?
Yeah, it's about investing in real estate. Yeah, not everyone is rich enough to invest in a property in Sydney, CBD or something. So I come across a website which says that you can buy, it's even marketed in the radio, it's called brickex.com.
Yes. Yep.
Yeah, so is it too advisable to invest in products like that? Because I haven't come across something like that. This is the first time coming across. It's just like investing in share market, but the volatility is less, I believe. I don't know how it works, and because I have a few dollars by the time if I accrue the exact amount to buy a property, the property rates are going up very fast, as you know. So is this was advised by someone, is it worthwhile to invest in?
Okay, yeah, sure, Kaplan. I know the product. I was watching how it was being introduced into Australia. In fact, they approached me from the UK with the idea, the concept of BrickX. And look, it is just basically another way. And it's not as though you're buying a brick in a house where you can then decide to go and sell that home. It's not like that. It's a very, very different structure completely to what it sounds like. But there are so many different property trusts you can invest in if it's just a few dollars you have. And I'd encourage you to look at those avenues as well. I'd also encourage you to pair up with people. That was a very popular thing in the 70s and 80s, and it's come back a great deal more, where people are getting together and collectively buying a property when, as individuals, they don't have a chance. So I think I'd look at a number of different ways, including those three things.
Thanks for your call, Kapla. 13 12 83. Charles Tarbey's here. Property Fast Track. Keep those calls coming. Peter's in Preston's. Hello, Peter. How can Charles help you?
I'd like to know a two-part question. Who sets the commit on a private sale of a home? Who set the agent's commission rate? Is that a government set, or is that set by the real estate commission or agency? And second of all, why does a real estate agent take a percentage of the value of my home? If I've worked really hard and built a nice home and it's worth $1 million, why should you get a percentage of that, of what off my back type of thing?
Look, the first part of your question, the answer to it is that it was a very different structure right around Australia, and it was governed by certain bodies, and in some cases still to this date it's changing. It's really up to you. You determine what the agent's commission should be, because you can go down the road of private sale, you can go down the road of discounted real estate commission agents which are out there, or you go with an agent that presents themselves in a manner that makes you feel comfortable about your property. And I think that's the big thing, Peter. I was on Sky recently, and the host said to me, "Well, what would you do?" I said, "Well, I'd go with an agent that's going to do the best job for me." And sometimes, Peter, it's not about the commission at all, and that's the part you really need to get your head around. As for a percentage of your property, again, that's really up to you how much you pay the agent, and you can get 2 or 3 agents out, and they'll all give you something different. But realistically, it's not about the agent's commission. It's about marketing your property to the widest audience to ensure that you as a seller have got the best offer on your property. And I think that's the key. That's the key.
I've bought, built and sold 3 or 4 homes over the years, and the commission always seems to be, about the same 2% or something like that. And when someone comes in with an offer, the agent wants you to drop your price, but they won't negotiate their commission.
Yeah,
I let an agent go because he wouldn't take a sale because I wanted him to drop $1,500 off his commission. He said no.
Yeah, I've been in that position as an agent, Peter, on numerous occasions, and it does look simple when you look at our industry. When you stand to the back, and particularly now, all you're seeing right now is seemingly agents going on Facebook, raising up a banner, an auctioneer coming out. The auctioneer keeps yelling until somebody throws enough money at them, and then everybody walks away, and the agent goes on social media and says, "What a great job I did! I got so much money extra for the owner," and the reality is they didn't. It's the marketing, and I think in today's marketplace we're in right now, particularly, our industry looks simple, but when I go back to real estate, and we always say there's 2 types of markets in real estate, one where we get the buyer up to meet the seller's price, that's called a boom. The other where we get the seller down to meet the purchaser's ridiculously low offer, that's called real estate. And 90% of the time that's what we're in. In the last few years we haven't been in real estate, and I think when you get into real estate market, you'll appreciate how much effort an agent does actually have to put into the sale of your property.
Thanks for your call, Peter. 13 12 83. Charles Tarbey's here tonight, helping you out with all things property and Property Fast Track. Charles, is it true, before we go to the next caller with Brian, is it true that good property sells itself?
Oh, look, it's I have no doubt you put 2 cars alongside of each other, exactly the same car, one's filthy, dude, and the other one's clean. It just makes such a big difference. And I've seen people just walk into a property and buy it because they like the way it feels and it looks. And so to me, it's an incredibly important part of the process. Presentation, and not just that, Nick, making sure that the owners of the property are not there when an agent brings people through, so that the buyer can express themselves, because they won't do it in front of an owner.
You're dead right about that. Now, in your opening piece, which we'll get to in a moment, you are going to touch upon what's going on in America with the Federal Reserve rates, and this ties into our next caller from Brian. Hey, Brian, how can we help you?
Yes, thanks for taking my call, Charles.
Thanks, Brian.
Before going on, initially, congratulations on your new program. I wish you all the very best.
It might only last this week, Brian, but thank you anyway.
Mate, I'm sure with the amount of interest in real estate and your knowledge, there will be a lot of people monitoring this program.
Thank you.
Now, enough of the accolades, mate.
Yeah, keep them coming.
Yeah, we're feeling
good, Brian.
fantastic.
We love you too, buddy.
The main purpose of the call is to get your opinion in relation to interest rates and property values. Now, as we all know, we've recently seen an interest rate increase in housing and investment loans by the NAB. Now, they're no doubt making sure their bloody shareholders are happy.
Look, that's... Sorry.
Within days, it's closely followed by Westpac.
Well, that's really quite a coincidence, Brian, don't you think?
Where it comes from, it means that, somebody's got to lead the way, and then the rest will follow.
Next time around, it'll be another bank that goes first. I think they do take it in turns. But I was chatting to somebody about this just recently, Brian, because the RBA are in a position where they've been talking about reducing rates from economic purposes. But that impacts negatively on the real estate market in that it continues a boom that should have stopped a year and a half ago. So they talk about what they want to do about housing, but realistically, there's nothing they can do. They can only talk about it. So I was talking to these people, so I think if the banks don't make a move, we're going to have some problems. And luckily, and I say luckily, NAB made a move, and I think it's important that the banks get a bit more control on interest rates. And I don't see a problem with rising interest rates because, again, if money's too cheap and people just race out and buy, they're going to push prices beyond what they should be. And we've had a guy called Harry Dent who's been coming out to Australia every year from the US for the last 5 or 6 years. and talking about a bubble. Now, he's going to be right one day, but he hasn't been right the last 5 books he's released. But he's going to be right one day, and it's going to be caused by the fact that people are just going way over the top. You look at interest rates, and if interest rates are 4% and they go up to 5%, that's a 25% increase in your repayments. And if they go to 6%, which is achievable, that's like 41+% increase in repayments. And I keep asking people, what's going to be like for you if you go from this repayment to another 41% in a couple of months? How are you going to cope? And most real estate agents, I guess we get hassle because we talk the market up or whatever. You're not going to get that from me. You're going to get it like it is. And I really think people need to be very careful.
Mate, just one last thing, and I won't hold you up too long. But do you believe that the price, the interest rate increases indicate that 2017 we're going to see further rate increases?
I do think we will, and if it's not RBA, I do believe it will be the banks. And again, as debt increases substantially, I'm not sure the salaries are keeping up with the debt that people have. You get those two to collide, you get the US market to raise their rates even more, and our rates become uncompetitive, you're going to see some changes.
Thanks for your call, Brian. 13-12-83. Great. So you've cleared that up because the US Fed Reserve raised its rates for the second time, making it only the third US rate rise since the GFC. Interesting stuff. So you've covered off what you think it may happen here on the Australian market. And later tonight, we'll also dive into how that may affect pricing from state to state. Charles Tarbey here tonight, Property Fast Track. And in a moment, should we allow first home buyers to tap into their super account to help finance the deposit? We'll throw that one at you in just a moment.
Thanks.
Hey, good to share the space with you on this Monday night. Nick Bennett and Charles Tarbey. Should we allow first home buyers to tap into their superannuation account to help finance the deposit? That's a question that's been around for 6 months now, Charles. It's been banging around.
It has, and obviously because so many people have had issues with buying a property, in particular in Sydney. But the problem is they keep focused on one marketplace or one or two marketplaces, and that's mostly Sydney and Melbourne, and that's not where it's happening. There's not outside of that. The marketplace is reasonably stable, and the further out you go, the more stable it is. But there's a lot more noise here in Sydney and Melbourne, so that's why it keeps coming up.
So not a new question, but it's back again today. And former Prime Minister Paul Keating has written a pretty acerbic opinion piece, as he does, and that's part of his great sort of
yes, I love
appeal, isn't it?
I miss him in watching Parliament. I really miss Paul Keating.
Likewise. So Mr. Keating has slammed the idea as reckless, and the government's been quick to point out there's no proposal to allow a super raid. Liberal MP John Alexander let it slip, though, that the government was considering something like this ahead of the May budget. Like anything, there are pros and cons to it, but would the negatives outweigh the positives? That's what we've got to decide. Stuart Waugh is an Executive Director with Bell Partners, and he's on board for Property Fast Track tonight. Good evening, Stuart.
Yeah, good day, Stuart.
Good evening, guys. How are you?
Yeah, good to catch up with you again. Let me pose the first question to you, Stuart. See what you and I have discussed this before, but when this suggestion's made, economists are always quick to point out that it would simply drive up the prices of real estate. What do you make of that?
Yeah, I mean, it's just something that people take a bit kind of carelessly in the way they approach buying property. So, yeah, I mean, at the moment, we go through a consideration process to buy property. We go through a period of time when you save money. You set aside parts of your life, and you give yourself a bit of discipline to buy property and save money, and to give people a bit of a leg up, I suppose, if you look at it that way, in making access to super, which is compulsory. Then we're actually making it a lot easier. Maybe and reckless could be maybe a word that could be thrown around.
Could you look now? You're a senior executive of a very large accounting firm. What do you think in terms of advising people with regards to using their super? I mean, normally we would use our super for a variety of things. Notwithstanding, we can't go and buy a holiday home with it, but for our personal benefits. But what do you think of the concept of letting younger people utilise their super funds?
Well, it certainly gives people a more sense of using super. I mean, at the moment, people that are younger don't really see super as being something that of advantageous to their lives. I mean, they feel it's a long way away, and they also feel that the legal laws do change a fair bit. So therefore, they feel like it's just a part of their life that they don't really see any advantage to. So to give people access to it would certainly give them a sense of putting more money into super. I mean, we're talking about a 15% tax rate, which is a very large discount on what normal marginal rates would be at 46%.
Well, what do you think of? Let's just say they come into a marketplace that we're in right now, and they happen to buy at the top of the marketplace. Interest rates move up, market starts to change, equity, what they had in equity starts to diminish. What do you think then? Because that's my biggest concern. What do you think the impact might be then on these people if they turn into negative equity, which we've seen in some parts of Australia and are continuing to see right now?
Oh, and that's where I was going with my first comment. I suppose in order to buy property, you need to have some kind of discipline and also training. Not so much training in a schoolyard, training as far as living life and making sacrifices in order to make sure you're buying property and go through the cycles of what property and buying investments can go through. I mean, you and I that are basically a little bit older have been through different interest rate rises and different markets as far as the GFC and other markets we've been through. And those kind of markets have an impact that do train you in the real world and looking after and making sure you can go through these cycles to make sure you can hold property.
There was always something out there, government assisted, especially when I was looking to buy in the early days. I never got a chance to get government assistance, but as I was selling real estate in the late 70s, they started introducing terminating building society loans. The government supported, and these loans were anywhere between 9.75% and 11.75%, and they were cheap. So it's fascinating the different things that various government departments might come up with, or individuals in terms of suggesting how to solve the crisis.
Yeah.
The crisis has been there for a long time, Stuart. You and I have talked about the fact that there's been an undersupply of stock. We've talked about this on Sky for the last 4 years, and that certain state governments have done something about it, but certainly New South Wales government really didn't get their act together, and we're one of the worst when it comes to supply issues, and this is why we're dealing with such a catastrophic situation for first home buyers.
I 100% agree with what you're saying, Charles. The other thing too is that we're talking about a market that doesn't have much supply at the moment, and putting more people in the market in a market that's already compacted. It's going to cause more problems as far as price issues.
Okay, well, Stuart, thank you so much. I really hope that you can join us again over a period of time and chat to Nick and I about different things.
Stuart Waugh, Executive Director with Bell Partners. Thanks, mate. Appreciate your time. Property Fast Track it is, 13 12 83, and Nick Bennett tonight with Charles Tarbey, joined by William in Blacktown. Hey, William.
Hi, Charles. How are you going, Nick?
Good, thank you.
Look, I had a really question that's bothering me a lot. As you see, in the recent, Western Sydney area, the property prices, skyrocketed a lot, really high. So I'm from a religion where I can't get any interest-related loan.
I see. Yep. Okay.
So my biggest thing is that I'm a sole trader. I have about, say, $250,000. I want to buy a house back in about 7-8 years ago. Would have been able to buy something for that. I want to know, would it be better to buy commercial property as Parramatta's about to sort of become the next CBD?
Well, look, financing might be the issue there too, because the prices have just gone crazy. Luckily for me, over the years, I've managed to be involved in commercial, residential and developments, still am. And so I can see it from all different angles, and commercial can be very risky. I have commercial floor in each capital city where Century 21 is located, and the only reason I purchased those is because, William, I'm the tenant, and I can control the movement and the situation there. But I've seen so many properties where they can become vacant very easily, and then all of a sudden, as a landlord, you're not only really losing a significant amount in rent, but you're having to give away a lot of discounts to get tenants back in. So I would say, as my first investment, that's probably a dangerous move. But when it comes to buying real estate, we had a caller earlier on. I do think if you can't borrow money, you should try to join with somebody in your religion that you can buy together and pay cash for property. And you can then take a few more risks. So you might be able to do commercial if you've purchased for cash, because commercial will, at the end of the day, and can outperform residential significantly. So I would really think about pooling again in terms of getting people of like-minded and from your own religion to do something together.
100%. Look, one last question I want to ask was,
Sure.
My brother is a bit older. He bought down in Melbourne a couple of years ago, and that sort of, Sunbury area.
Yep.
That sort of went well for him. So does my father as well. But I was looking at Newcastle Orange area as well for residential, as they're a bit cheaper there.
I like both of those areas. You'll find Newcastle's more expensive. Orange I love because it's got this massive infrastructure, a lot of government departments in that area. It's been an incredibly strong town for a long time, and now it's gone beyond the government departments in that it's also got wonderful wineries, restaurants and other industries that have taken hold. So if you could get out to Orange affordability-wise, that's where I would look.
Oh, sweet. Thanks so much.
Thank you, William.
Thanks, William. 13 12 83. Taking your calls tonight. Charles Tarbey is here to guide you through with Property Fast Track. And still to come tonight, some interesting stuff when it comes to what's going on in the auction scene. Auction wrap on the way with Tom Panos. And then we go around the grounds to see what's been happening in Brisbane, Sydney and Melbourne as far as specific property movements in those three locations. Great to be here for this Monday night. Nick Bennett and Charles Tarbey. Interesting stuff from William before.
Yeah,
I had heard that in Islam, interest is forbidden, and he confirmed that for me, so it makes it tough unless you bandy together to get ahead. Okay, let's find out what's happening with Raylene. Raylene is Century 21 North Lakes in Brisbane as we go around the grounds. Evening, Raylene.
Good evening.
G'day, Raylene. Charles, we wanted to bump a few heads with some of the guys around the country and get what's going on in the ground. Like a quick update, and I really appreciate you taking the call. And Raylene's up in North Lakes, a great location in Brisbane with a lot of new subdivisions, a lot of new shopping centres. It's quite expansive. So, Raylene, what's really happening in your marketplace for you? Have you got enough stock at the moment?
Oh, look, stock is always a perennial problem in real estate.
Yeah.
Always chasing it.
And that's the same for you then. Everywhere I turn, we see the same thing. But from your perspective then, the outlook for 2017, even with limited stock, you're seeing a lot of interest in your area?
Oh, absolutely, Charles. We've got a lot of buyers locally and from interstate. Obviously, Sydney and Melbourne with the markets going strong there. We're a bit more stable.
Because your pricing would be what, mid-fours upwards?
Yeah, look, you can get a nice 4-bedroom, 2-bath, 2-car garage for $470 on a good-sized block.
You see, that's what's happened. You could buy in Sydney or sell in Sydney and go to Brisbane years ago, and you could sell in Sydney for $500,000, buy in Brisbane for $300,000 and end up with $200,000 cash.
Yeah.
And the Brisbane price has caught up, and now they've spread out again, so it's a great opportunity. Raylene, don't want to hold on your time for too long, but just one more quick question. The median price for property there for houses as opposed to units, what's happening with units in comparison?
Yeah, units are a bit more stable. They're sitting about $380,000 for the 3-bedroom townhouse style.
What sort of rental return?
$360.
Okay, well that's right on the money, isn't it? That's you're not going to get that anywhere across this great city here in Sydney, but Melbourne you might.
Yeah.
But certainly Brisbane's a good one.
And we'll check Melbourne pretty soon as well as we continue to go around the grounds.
Thank you, Raylene.
Teague, thank you. North Lakes in Brisbane, Century 21. We'll go to the phones and keep them coming. 13 12 83. We've got Vicky on the line. Hey Vicky, how can we help you?
Hi, how are you?
Good, thanks.
That's good. Look, I live out in the Central West, and I'm looking to buy an investment property. And where I'm located, the growth is not great. So I've been looking at different areas, and one of the areas that I'm focusing on at the moment is around the Nowra area.
Okay, yeah. So you're from the Central West. How far out are you?
Cowra.
Okay, great spot. Yeah, a lot of history in Cowra.
Some very good Chardonnays in Cowra.
I've got some dear friends, Brian and Colleen, that live out that way that give me some updates on what's happening in the market.
Oh, really?
Yep, yeah, they do. But you mentioned Nowra, and the interesting thing about Nowra, I really pushed this location of the South Coast for quite some time because you always hear about what's going on further north of you all of the time, and people were just seemingly ignoring the area. And you've got this massive infrastructure in the road that goes all the way, the highway that's been built right through, bypassing Berry, and it takes you into an area where there are magnificent beaches, magnificent lifestyle, but a lot of the time when you hear about places like Nowra, you think about the Army base or it's one of those sorts of areas. But I particularly believe that area's got enormous potential, notwithstanding that I have an interest in property down that area.
Okay. I've driven down there many times, and within about a half-hour radius of Nowra, you've got the absolutely beautiful Kangaroo Valley.
Thank you for mentioning that. There you go, first show, Nick. It's a lovely golf course down there, Vicky, but I'll talk about that another time.
Oh, okay. I've actually played golf on that golf course.
It's expensive. I would be really looking closer from an investment perspective, more inside of Nowra if I were doing that, Vicky.
Thanks for your call, Vicky. 131283. And Mary's on the line from Brisbane. Hi, Mary.
Oh, hello. How are you?
Good, thanks.
Hi, Mary.
Thank you. Look, I just looked at purchasing a property in a city, in Toowong, and the way it worked was what he called the Genman system.
Oh, you mean the agent?
The agent.
Okay.
Well, I'm not familiar with it, but I asked him what I have to do, and he said it's going to close this afternoon at 4 o'clock, so you need to put your price. I said, well, what do you as an agent suggest I should put down for me to secure it? He gave me a price. I accepted it. I wrote it down. He rang me an hour later to tell me I wasn't successful. I asked him what was the going price, and if I could increase, I wanted it, how could I secure it? Well, it was too late.
Yeah. Look, this is also a perennial problem in real estate. The Genman system might operate slightly differently. At the end of the day, Mary, we're all trying to achieve, or should be trying to achieve, the best possible market price for the seller. And this is why I've always said to people, when we talk about certain areas, and Toowong's one of those areas, where if I owned a property in Toowong, I'd put it to auction. I wouldn't go down any other path. Unless there was some sort of hybrid bidding process in place or full auction, I would not be selling a property private treaty in an area like that. So I think maybe the agent you might need to talk to the agent about going back to some sort of training. But from a agent's point of view, my approach to it would have been very, very different for the seller. And of course, Mary, you know, a lot of people come back when I was selling real estate. They'd come back and say, I would have paid more. And that is a problem. And I think that there's a whole new range of systems, which I'm going to talk about over the next few weeks, that are coming in that help buyers and sellers transparently negotiate transactions. So any Department of Fair Trading, a government body of any sort, will be able to see total transparency in transactions, Mary. So I hope you do find another property.
I have, but I was just very disappointed with the way it was handled. So thank you for that. My concern was if I was the vendor,
yes, that's exactly
I'd have
right.
been really unhappy because I would not have got my real price.
I'll say one thing to you quickly. In all my years in real estate, I've never had anybody look in my window, see a property advertised with a price, walk in and say, gee, I like that property so much, I want to pay you more. It's never happened.
Well, there you go.
Okay.
I think that happened in a funny movie once called The Life of Brian, and I've not seen it since. Thanks for your call, Mary. Appreciate it. In Brisbane, 131283. And we're talking property fast track tonight. Nick Bennett and Charles Tarbey. Let's go to Melbourne. Katos, and he's there at Century 21 Clayton as we go around the grounds and find out what's going on in Victoria.
Well, Con, like Raylene, very, very experienced practitioner. Con's a seasoned auctioneer out of Melbourne, very highly regarded. The press give him a call when they want to chat about real estate. Con, you're in an area that's expanded rapidly. Tell me a little bit about Clayton, that area.
No problems. Good evening, boys.
G'day.
Melbourne, Charles?
Yes. Yeah, well, even your area, Clayton, because we want to get right down to each suburb and dig deep, and because people might not have heard of Clayton outside of Melbourne. They might wonder what the hell does that mean, because for me, Clayton used to mean something else, as you know. So.
That's one of those drinks you have when you're not having any drink, right?
That's the one, yeah.
Listen, Melbourne as a whole, you know, we've always talked it up, but it has been extraordinary. As we've talked before, Charles, like we're running a sprint and just becomes a marathon. It just keeps going and going. But,
Melbourne's a bigger auction market than Sydney. If you look at the numbers last week, there were far more numbers of auctions. So
we had over 1,200 last week.
Yeah, compared to Sydney, which was just over 700. But your clearance rates weren't as high, but that's expected. I mean, your clearance rates came in at 70. Let me just think. You just came in under Canberra, 75.9. You were. Yeah. Canberra was 76.6. So, but
a little bit higher on the house side.
But you're a seasoned auctioneer. So, what are you saying?
Listen, as you said before to the last caller, if I was selling my property, there's no choice but to auction the property in today's market. There's so much competition out there. Your supply and demand, what you were talking about before.
Yeah.
It'd just be crazy to
do it any other way.
Yeah, to do it any other way and not have that competition, in front of the property and transparency as well.
What's the demographics in your area? What sort of buyers are coming into your area?
We're in Clayton, so we're near Monash Medical and Monash University.
Infrastructure.
Which is a high Asian area. We have a lot of overseas Asian buyers. I think after the Australian population, I think the Chinese are 30% of our residents.
And your median price in that area, if somebody's interested?
Clayton is around $1 million.
Wow. Wow, isn't it? Now, when was it? We can't get in there for too long, but when was it 500,000?
Not that long ago.
Oh, God love you. Con, thank you so much. Really look
Charles.
forward to talking to you again soon. Con from
Good night, Nick.
Century on
Good night,
Clayton.
mate. There you go. Around the ground, just a bit of an insight into what's happening in Melbourne and prior to that in Brisbane. Property Fast Track 13 12 83. Keep those calls coming. Charles Tarbey is here to help you. He's got lots of wisdom to share. Now, we're going to have an auction wrap in just a moment with Tom Panos, who's an auctioneer and a real estate coach. You can teach this stuff, can you? It's that easy.
Oh, Tom's the specialist, Nick. I sit back in awe and watch him.
All right. Cheers, Charles. Lots of calls tonight, which has been great. 13 12 83 is our number. Nick Bennett and Charles Tarbey for this Monday night. And Tom Panos is on the line. He's an auctioneer and a real estate coach.
Hey guys, how you going?
Tom, you in Adelaide?
I am.
So I won't be seeing your smiling face tonight on Sky Business.
No, won't be on tonight. But I believe that you're the captain tonight of the show.
Yes, I am tonight, and I'm going to look after Chris Gray.
But you know what, Tom? You can look at Charles' smiling face right now because you can stream it at talkinglifestyle.com.au, mate.
Wow.
Which camera should I be looking at?
Just
that
that
one
one
over there.
You got your own camera, Charles.
That
That one, you just smile over there.
Oh, let's wave hello to my son. So, Tom, the auction results have come in again this weekend, and as you know, the clearance rates are slightly higher than this time last week at 76.2%. So they're still moving along, and Sydney, which actually was getting behind the other two capitals, the ACT and Melbourne, has gone ahead, 83.9% in Sydney. How responsible for that clearance rate were you?
I wouldn't say totally responsible. I might actually, I'd say partly responsible, to not responsible at all. But let me, Charles, there was a result in Picnic Point. Now, Picnic Point's not the double bays or.
It was where you went to for a picnic, literally, when I was a kid.
Yeah.
That's where you went. You went down to Georges River and down through those areas, down Revesby, past Revesby way, yeah.
Well, Charles, let me tell you about a property that went to auction there that sold $615,000 above the reserve.
Wow.
So it sold for $2.515 million, and it had 32 people registered to bid on the property. And it's an interesting property. I mean, I wasn't involved in the transaction. But I just know that there was a lot of buzz over this property because it exceeded what everyone thought it would get. And it had look, Charles, you know the area. It's a nice area, but as I said, it's not in the eastern suburbs or in Mossman.
How does that happen, though, Tom? This is what people are talking about. How do you get 600? How do we all get it so wrong? And I feel that's what it is. How do we get it so wrong when 615,000 over reserve?
That's an interesting point.
Well, if you listen to what the bidder said, his name, Chatty, was asked about his bidding tactics. He said, I went all in or nothing.
Wow.
And then he's gone on to say, there will be no celebrating as I'll have to put all our other properties on the market.
All right, so it sounds like he's got himself a trophy home. This is a place he really wanted, right? Come hell or high water, and he probably is on the water.
Yeah, well, Nick, it is on the water, and he's not sure what he's going to do with it. But I mean, that was one of them. But I mean, there was in Brisbane. Go on.
No, I was just going to say. So you can see more happening around the country as well, and obviously.
Yeah, well, look, Brisbane. Most expensive house was sold for more than $18 million. So a record was broken, and that was in an area called Kangaroo Point. And I know the suburb sounds familiar because it's an area that you've invested in, Charles.
Well, no, I talked about Kangaroo Valley. Kangaroo Point's a very different spot there on the edge of the city. So
that's right.
Of Brisbane.
Again, on the water.
Yeah.
It's all about the water.
Tom, just your quick forecast of what you think the market's going to do in the next few weeks?
I think this is an interesting one, Charles, because I'm beginning to still see good results, but I'm beginning to see a little less buyers coming to open for inspection.
Right.
So there is a possibility that in a few months' time, the lower number of people coming through open for inspections may result in a small correction. We're still seeing buyers that missed out on properties over the last 3-4 months, or people that sold their houses, 4 or 5 months ago. They're the buyers that are bidding at auction.
Tom, I know one agent that from the South Coast. I know as a friend said that they had 5 open for inspections on the weekend. 2 people through. Now I know the rain might have had something to do with that, but that is just a disaster when you think about it. So there is what you're saying. It's changing, Tom, and we should all welcome that change, because I think that change has been long overdue, mate.
Yeah. I even noticed at a few properties, Charles, that I was auctioning, that as I left, some of the buyers would say, "Oh, look, we weren't going to get carried away because there's a lot of talk about interest rates in America and what have you." So people do get scared easily when there is bad news. But I might just, on a more topical note of bidding tactics. Charles and Nick, I did a property on Saturday, and I've never seen a bidder try and intimidate another bidder as much as this. This woman walked across the room. It was raining, so it was in an apartment. She walked across the room and went within 1.5 meters of the other bidder, stared her in the face, and every time she'd bid, she'd just look at her and increase her bid by $1,000.
Oh, my God. Gee. Tom, I had that situation, and we're really looking forward to getting you on each week to talk, but I had a situation where I was doing the auction. A person walked from the back of the room right to the front of the room, went into the person's face and said, "If you bid any more, I know where you live," and they walked away. So it does change, mate. Look, thanks, Tom.
Yeah, appreciate it. Tom Panos, auctioneer and real estate coach, and Charles Tarbey, thank you for your time. The greasy eyeball tactic seems to work. We look forward to talking to you more next week, Charles.
Thanks,
appreciate
Nick.
it. News is next.